Hello everyone, this is Arnaud Delapierre. Welcome to this video dedicated to those who want to get started in the financial market. We will cover the essential basics to understand how the markets work, who are the participants, and how you can start to progress in this ecosystem, sometimes complex. We will avoid incompressible and incomprehensible jargon and stay simple and direct. If you are a beginner, you are in the right place. My goal is to clarify the main mechanisms and give you the first keys to progress with confidence. Make yourself comfortable. We will start in just a few moments. Let's start with the definition of a financial market. It's simply a virtual or physical place where assets like stocks, bonds, or currencies are exchanged. Participants buy or sell according to their price expectations. And these transactions influence the value of each asset. Simply put, it's like a traditional market where you trade products, except here, the products are financial. Price changes are based on supply and demand, but also on multiple economic and psychological elements. Knowing this helps avoid certain pitfalls and better assess the opportunities that come your way. In the markets, financial markets, there are several types of instruments. Firstly, there are the stocks, which represent a share of ownership in a company. Then there are the bonds, often associated with a loan made to a public or private entity, in exchange for a regular interest, of course. There are also derivative products based on the value of an underlying asset, like a stock index or a commodity. Each instrument has its level of risk and return, of course, and it is important to be well informed before buying or selling them. This comprehensive view will help you make more informed choices. Take the time to weigh the pros and cons. I'll take a second to talk to you about an app called Notrade. Available for free on iOS and Android, it's a tool designed for those who want to receive trading signals in real time without breaking the bank. Its interface is simple, where you configure your preferences and you receive clear alerts to know when to enter or exit a position. Quite handy when you're starting out and can't monitor the markets constantly. If you're looking for an assistant for your trades, Notrade could certainly give you a helping hand to optimize your organization. Test it to see if it suits you. When we look at the markets, we often hear about stock indices like the CAC 40 or the SP 500. These indices group together a set of representative stocks of an economic sector, and their movements give an indication of the general trend. They are also benchmarks to evaluate the performance of certain portfolios. For example, if your basket of stocks grows faster than the SP 500, you can consider that you are doing better than the average. By keeping an eye on these indices, you get a concise view of what is happening in different market segments. It is a good reference for beginners. Financial markets are not a closed club reserved for an elite. There are individual investors like you and me, fund managers handling significant capital, banks, companies, and even governments. Each has its goals. Some seek long-term growth, while others speculate on quick trades. Everyone also has their own way of proceeding, with strategies that can be very diverse. Keep in mind that all these participants meet in the same trading space. That is very important to understand. This creates a game of supply and demand. The dynamics are sometimes surprising. Volatility represents the magnitude and speed of price changes in the markets. When volatility is low, prices change slowly and steadily. When it is high, it becomes more nervous, with sometimes significant fluctuations in a short period. This characteristic can be an asset for those seeking rapid movements, but it can also generate high stress if one is not well prepared. Understanding these fluctuations is part of the game and allows one to adapt their risk management plan and not panic at the slightest reversal of situation. It's an element to keep in mind constantly. The real economy impacts the financial markets. A fly is attacking me. Sorry? Yes. As I was saying to myself, well, let me take another example. For instance, if the central bank decides to lower interest rates, it often makes credit cheaper, which can stimulate economic activity and thus boost the stock market. Conversely, an interest rate increase can curb spending and lead participants to turn away from risky assets. By keeping an eye on these macroeconomic data, one can better anticipate capital movements and then position your portfolio, taking this context into account. Let's talk a little of the two main approaches in trading: technical analysis and fundamental analysis. The first focuses on charts and indicators to identify trends or price patterns. It's a rather visual style that helps capture the pulse of the markets in the short or medium term. Fundamental analysis, on the other hand, focuses on the financial health of a company, the prospects of a sector, or the overall economic conditions. Many traders combine these two approaches to refine their decisions. Thus, they combine both numerical data and graphical figures to have a complete overview. It is often a fruitful alliance. Let's also talk about capital management, also known as money management. It's an aspect to never underestimate. Prudence protects you from big losses and allows you to last in this activity. The idea is simple. Do not bet all your money on one position and ensure that each risk taken remains measured. Many beginners focus solely on stock selection or signal analysis and neglect protecting their portfolio. Managing exposure, adjusting stop losses, and distributing investments coherently are practices that allow progress in a more serene manner. Before you embark on a transaction, take the time to define your objectives. Are you aiming for a quick capital gain, or are you looking to build a portfolio that will grow over several years? What are your time and liquidity constraints? Clarifying these points will help you select the assets that you correspondingly. You can also establish a precise schedule to track your positions and correct as you go along. By progressing with a clear vision and some discipline, you will avoid impulsive decisions and know when to seize a real opportunity. Sometimes, patience is the best strategy. The psychological aspect is very important in trading. When markets fall, fear sometimes drives selling at the worst moment. When they soar, greed prompts to buy too late. To avoid falling into these pitfalls, it's better to keep a cool head and rely on objective criteria. Ask yourself if your action stems from mere emotion or thoughtful analysis. Of course, it's not about ignoring your feelings, but rather managing your impulses. By developing your composure, you give yourself every chance to achieve your ambitions. Every mistake is also a lesson to retain. A trading plan acts as a guide. It defines your strategy, your entry and exit points, as well as the amount you are willing to commit. Everything relies on your personality. Cautious, moderate, gambler, everyone adapts their approach. The important thing is to set rules and stick to them. Without a plan, you risk a big risk to react to every rumor or to get carried away when prices rise a bit too quickly. Having a written plan allows you to remember why you invested and what you are trying to achieve. Consistency is a guarantee of longevity. Educating oneself remains a winning investment. Markets evolve, new technologies appear, and the behaviors of participants sometimes change radically. To stay in the game, read, follow renowned analysts, participate in webinars or conferences. Sharing your thoughts with other enthusiasts can help you discover new ideas. For example, in our trades, we see very interesting things, honestly, every day. This ongoing approach provides a better understanding of the mechanisms at play. Also, if you enjoy this content, subscribe and like the video to support the channel and receive my upcoming advice. Staying close to current events can really make a difference in your conclusions and results. Here, we have covered the basics that will help you better understand financial markets. Each aspect discussed here could really be developed further. We are at a beginner level, but the most important thing is to grasp that no one becomes an expert overnight. Perhaps that is ultimately the point of the video. With practice, with patience and good organization can help you build solid progress. Keep learning and refining your methods, and don't hesitate to return to delve into other topics that interest you. I hope this video will be very useful to you. Thank you for listening, and see you soon for a new step in your financial journey.